Welcome back to another exciting year. If you are looking for some really interesting investment opportunities in the stock market, well, join the club. I'm also hunting those down. I just wanted to quickly update you, however, on some of the changes that I will be making this year in 2024 to try and increase some of the stability in my family's holdings. So I'm calling this the Trident approach. It's got three main prongs. First of all, I am looking in the first prong for stability, safety, and hedging. So this is where I'm thinking about bonds and other alternative assets that are going to move inversely to the main stock market. So basically, as my stocks begin to move down, if there's a recession, I want these assets to hold their value or to gain in value. So that's the first basket. That's the first tranche. Now, the second tranche is going to be what I might consider to be the core holdings within the stock market. So here I'm thinking more about major stocks where I've got very large positions, as well as those exchange traded funds, the ETFs or other closed end funds, which are essentially going to be large positions. There's going to be a relatively small number of them, and they're going to form the basis of my total returns as well as the basis of my steady eddy income. So that's that second tranche. So that's going to be primarily there for diversification over the stock market, over different sectors, trying to ensure that I've got a good mix there of income and total return potential. Now, in terms of the type of ETFs that I'll be looking at investing in, well, it's quite simple. I'll be investing in ETFs like MOAT, MOAT. I'll be looking at, for example, the GARP ETF. I'll be looking at several other ETFs, trying to get a good mixture of investment styles there. But I'm looking for ETFs that are going to give me exposure to quality. They're going to give me exposure to growth. They're going to be taking, say, the universe of the S&P 500, for example, but they're going to be isolating out what I believe are going to be the better companies. So the core in this is looking for good companies. These are going to be strong companies, quality companies, whether or not I'm holding them in ETFs or whether or not I have specific holdings for them, such as Realty Income or Main Street Capital, the BDC, looking for income and growth in those incomes. So that's the second tranche. And the third tranche is essentially the satellite positions in the core satellite approach. So the third tranche is where I'm looking for higher growth, higher risk, higher reward opportunities. Now, this is where I'll be picking a small number of companies and I will be investing in them. Now, as I'm doing this, one of the key changes that I wanted to make in 2024, yes, I wanted more stability and some hedging, but I also wanted to be more selective on these satellite positions here on this third tranche and my Trident. Here, I want to only be holding a smaller number. And at the same time, I do want more sector diversity. Now, this brings me to one of my key reflections on 2023 was I was a little bit early to the party, I think, in investing in some of the REITs and the utilities. And as the interest rates stayed high and as the Fed looked as though they weren't going to be lowering those interest rates anytime soon, my overexposure in these interest rate sensitive sectors was not fun. It was not good. And I saw the value of those holdings decline over the year as I was holding them. So I was too early to the party. In the last couple of months, I've seen quite a strong surge in the value of those assets, but it's not something I want to repeat. So within this third prong of my Trident approach, satellite positions, I'm looking for more sector diversification. Now, why smaller numbers? Now, this comes back to the sort of the Buffett idea. I am looking for the best. If I'm only holding a few positions here, I think this is good. These are positions that I'm going to be holding for years. I need confidence in them. And I also want to have some additional dry gunpowder, some additional capital to invest within these areas here in these satellite positions so that when something does fall into value, when the market is mispricing something, I want to be able to jump in there and take advantage of that opportunity as the market offers it to me. So small number of positions, sector diversification. And what am I looking for here? Am I looking for total returns, capital appreciation, super high income? Well, as usual, I am going to be looking for income. Is it going to be the highest income possible? Oh no. I'm going to be looking for some good, solid income here, some income growth, and also some capital returns. Whether or not that's from multiple expansion or just general growth of the company through growth on the earnings per share. There will be a couple of other options that I'll be looking at in there. And as we go through in 2024, I will explain a little bit more about what I'm looking for in each of these options and why I'm investing in them, as well as what I'm monitoring. Because risk management coming out of 2023, risk management is one of those key things that I want to focus on a bit more. So I want these satellite positions to, yes, be more risky, but at the same time, taking more of a value investing approach, which I'm very familiar with, which I do love. I want you to be trying to buy these with a reasonable margin of safety. Now, that's my approach, the Trident approach for my family: stability and hedging. In the middle, I want my core holdings and stock market exposure, stock exposure. And then in the third prong of the Trident, I want to have a higher risk, higher reward satellite positions, whereas the other two prongs are really my core positions. So that's what we have planned for 2024. What about yourself? How are you planning to get ahead? How are you planning to structure your investments in the year ahead? Let me know down in the comments below, and let me know what you think about three-prong Trident approach that we will be structuring our investments around. Looking forward to hearing from you soon. Ciao for now.